Most traders draw support and resistance zones on their charts with absolutely no context or idea of what's happening on the higher time frames. And what happens? They keep getting stopped out because they don't understand what phase of price we're actually in. Is price accumulating, manipulating, or is it actually distributing? So this is how to get into high probability trades like this 2.5R that played out perfectly on USDJPY. This is a swing trade example. So we're going to use the 12-hour time frame and trade in line with weekly, 2-weekly, and monthly candle ranges. But of course, price is fractal, so this works just as well on the lower time frames. So let's just imagine we're looking at 12-hour price action in isolation. We have a sell-off. We have a buy to sell candle. This is our order block. So what we're expecting is for this zone to act as our resistance or our support for bearish trades. Price is going to come in, find resistance or support if you want to look at this from a bearish perspective, and ultimately continue lower. So this is where we'll be taking shorts from, but that is not the right read on the market. And I'm going to show you exactly why. So let me overlay a higher time frame candle range. What price is doing is that in this 2-week period, it has dumped. So price has moved in a downtrend to create a bearish 2-week candle. What happens next is price then pushes below the previous candle range, and in doing so it liquidates the low of the previous price range. So this becomes our sweep of liquidity. The external range liquidity at the low of this candle has now been raided. Price is now trading back into this resistance zone. So naturally, we are going to see some sell-off from this zone. But what happens is that price closes aggressively into the zone, and we get the formation of a new 12-hour order block. So this becomes support, true support in the market, because it's framed or it's created in the context of a higher time frame liquidation. What price then does is explode in a bullish direction. Now we're in the second week of this 2-week candle. If we can anticipate that this candle is going to close as a manipulation candle, we then expose a higher time frame target in the market, which is the high of the accumulation candle, because this is how price moves. Price accumulates, manipulates, and then distributes. So the target that we are starting to anticipate becomes this 2-week high. So then we can start to look at, well, where does external range or internal range liquidity sit to actually take trades from? And you see, this is the first bullish fair value gap. This is a gap in price, an inefficiency in price between candle 1 and candle 3. So what price does in the formation of this candle is it liquidates this inefficiency and then continues bullish. As soon as this candle closes, this target becomes the target for price. So price again raids the next inefficiency in price, the next fair value gap, and then breaks to the high. So where can we take trades? Of course, you can get in here. This is the optimum trade. This is front running the entire setup. This is a massive 3.9R swing trade. But equally, you can just wait for price to show its hand, enter at the first inefficiency, and cover the lows. So we can either cover the swing point or the last manipulation. Where do we target? The high, because price is going to accumulate, manipulate, and then distribute. This is a 2.5R swing trade. This is exactly how to properly trade support and resistance. True support and resistance is in context of higher time frame AMD. So this is support, this is support, this is support until the target is hit, and then context resets. So let's look at this again. This is a Euro USD example. Again, we're looking at the 12-hour chart. This looks very confusing and messy. We don't understand what price is doing. So let's just overlay the weekly candle here to see what price might want to do. And what we see again is a bearish candle. Price then raids the low. So without this context, we're looking at these areas here as our bearish support. Price is going to trade in and trade away. But what do you see in price action? Price action creates aggressive bullish price legs. By overlaying the weekly candle, we can see what price is doing. It's manipulating, it's sweeping the previous weekly candle range. And as soon as this candle closes, we have a very high probability setup. And where is price going to distribute to? This high, the high of the accumulation candle. Accumulation, manipulation, distribution. So in terms of trading this, again, it becomes very simple. Here is our order block. We can see that that is formed through the sweep of the previous candle liquidation. Then we can map the internal range liquidity. Here is a fair value gap, a gap in price between candle 1 and candle 3. So just taking a very easy high probability setup, low stress setup, we take an entry there, we cover the liquidation, and where do we target? The high. This gives us a 1.955R trade. But you can just trail your stop here. So trade it to 2R, or even wait. We get nearly a 3R trade. In fact, that actually comes in before it starts to dump. So this is how to take high probability swing trades. This is how to understand what is true support and what is true resistance in the market. Use it in context to take high probability trades. But ultimately, what we're always trading is accumulation, manipulation, distribution. And that is something that I teach on my YouTube channel for free across a 30 video 3-part series. So if you're interested in that, head over to my YouTube channel and check it out. I'll see you on the next video.